Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to go over one of the companies that were requested by one of the community members. So what I'm going to do is first I'm going to go over the company, what they do, and then obviously look at the financials, and then I'll just tell you my opinion if what I would do with this company if I was basically interested. This is not a company that I own at the moment, so it'll be interesting to look at that. This account here is my account. So what you see right here is actually the market is open right now, so this is going to go up and down, and this is live. Okay, so this is my real money. Basically, that's what I'm trying to say. I'm not just showing you some crazy account that I have found somewhere, or I don't know, some platform that's fake or whatever. This is real money. This is my own money that I put into this account. As you can see, I've invested over £70,000 of my own money. And the reason I started this whole account was just to kind of share my journey. I'm not a financial advisor. I'm not a guru. I'm none of that. I was looking for this type of videos, okay, when I realized there's none out there. There was nobody out there that was basically talking about halal side of things and sharing good practice. Okay, not only sharing good practice, sharing what they own, showing their portfolio week after week. And guess what? That's exactly what I've been doing for now almost 2 years. Okay, and 3 years, in fact. I've posted 335 videos. I've just realized today. Okay, and I'll promise you, a lot of these videos, some of them have done well, some of them haven't done that well. But you know what I'm really genuinely interested in is the fact that it's helping people out there. Okay, whether it gets to 1,000 views or 100 views, to be honest with you, it's obviously it would be great to be if it was 1,000 per video and so on. But to be honest, what I'm really interested in is basically reaction, basically from the community, and if it's actually helping others out there. Not helping just to start their own portfolio, to think about investing in the stock market and finding halal stocks and basically staying within Sharia compliant side of things. So I decided to show you guys week in, week out this, okay? And I'm going to continue doing this, inshallah. And for the long run, I'm definitely going to continue doing this, inshallah. So if this helps someone out there, alhamdulillah, that's all I want, okay? Because I'll be honest with you, there was nothing like this when I first started, and I wish there was, okay? So you've seen me start, I think it was when I first started this whole YouTube thing, my account was like £20,000. Right now it's £70,000. That's a lot of money. I'll be honest with you. That's a lot of money. For me, it is a lot of money. And I'm sure a lot of you sitting there thinking, exactly, it is a lot of money for us too. So I hope this inspires some of you out there. And if it does, please just give the videos a like. That's genuinely all I ask, right? Give the videos a like, subscribe to the channel, share with your family and friends. Even if you find one video out of the 300 plus, right? Then at least to give the some appreciation. Okay, the other thing that you can also do is, by the way, this platform that I'm using here, Trading 212, I think they take in new customers, because I get an email the other day that they've got a waiting list or whatever. So if you've been waiting and you've signed up, maybe hopefully you will in by now. If you haven't signed up yet because you were thinking maybe that they've got waiting list or whatever, I think they might be taking new customers. So if you want to just click the link on the description, and obviously you'll get hopefully you will get in, and hopefully you will be, especially if you live in the UK, this is really good platform that I like. Okay, I have no affiliation, nothing like that, but I'm just saying that you get a free share. I think I think I still get a free share. I'm not sure. I haven't received anything for a long time, so I'm not sure. Anyway, the other thing I want to talk about is just that if you can help the channel, okay, by signing up hopefully to the Patreon account, it really does help, and you get access to all of these spreadsheets that I put together for us. Okay, all the watch lists, all the dividends basically trackers, the ETF trackers, and then there's a Discord that I'm trying to build right now. So I'm trying to build this Discord where we have brothers and sisters who are like-minded, inshallah, who can help each other without me obviously being there. I'll facilitate, and I'll talk about things that I'm doing on a daily basis. I'll talk about my buys and my sells, any news, any change, whatever. I'll do all of that. But I would love, obviously, the brothers and sisters to also share their buys, sells, anything that they do, inshallah, within the community. And obviously, it definitely helps the channel. So let's now talk about the actual stock that we're here for, and that is Nike. Okay, Nike is one of the companies that is very interesting. A lot of people don't like this company, but I'll be honest with you. Look at the trainers you're wearing, your family members wearing. Everybody wears basically their trainers, their basic tracksuits, and all of the things that this company actually sells. So currently, as you can see, it's trading $107 per share. The market is open, so it's down about 1.18% right now. The basically year to date is actually down almost 10%, and this is what attracted me and thought maybe let's have a look at this. Okay, and obviously one of the brothers or sisters out there have actually said, can you look into this company? And then I thought, you know what, let's look at it. Maybe it's a good time because they report their earnings, I think in basically on the 16th, I think. There we go. 16th of June is basically when they report. So it will be interesting to see beforehand what's going on with the company. And looking at the last 6 months, you can see it's just up about 1%. Now, let's have a look at the, obviously you know the company, right? So I'm not going to go over what the company does. I'm sure everyone knows. But when I was looking at this analyst, it was actually quite interesting because Seeking Alpha, which is one of the websites that I actually have subscription to, they've got loads of analysts, and then you can see a lot of them are actually saying it's a hold and sell and hold. There are a couple of buys here, okay, but majority of them is actually sells and holds. Okay, so let's have a look at the financials, and then we will decide. We'll come back to Seeking Alpha in a second. So as you know, the company is Nike, $107 per share, and basically in the last 5 years it has returned 48%. Let's call it 49%. EPS is $3.47, a market cap of $167 billion. So it's a huge company. It's not a small company, right? It has a wide economic moat because it has a product that basically competitors cannot compete. Obviously there are others out there, but because they kind of monopolize that market, if you like, when it comes to trainees, when it comes to the air forces and all of that, okay, the newer generations love those kind of products. For that reason, it has actually wide economic moat. And the beta is actually above 1, which is basically not that bad. It's 1.11, okay, a little bit volatile. This is where I thought this is really interesting because when you look at the PE, when you look at the current PE, so the trailing PE and the forward PE, it actually seems very, very expensive in comparison to the consumer discretionary sector or the consumer cyclical sector. So that's very interesting. And the 5-year average basically for PE is actually 34. So, but it's slightly lower. So when you look at the 5 years, it seems actually cheaper right now. But then you look at the price to free cash flow of 45, which is absolutely ridiculous, right? Dividend yield side of it, so they do have 1% dividend. Okay, latest increase was basically 11%, and the 5-year growth rate of 11%. They will give you $1.36 for every share that you own. They have paid the dividends or increased that dividend for 20 years. So another 5 years, they will become a dividend aristocrat. The payout ratio is only 36%. So that means they can actually increase that if they need to in the next maybe 5 years or whatever and become a dividend aristocrat. The safety is 99%, and they have $3.8 billion of free cash flow. Okay, when it comes to free cash flow yield, they have basically it's 2.3%. We're normally looking for about 3%, and the free cash flow margin, okay, we're looking at about 5%, is right now 5%. So anything above 5% is perfect, but 5% is basically where it is at right now. In terms of profit margin, was like, I was actually quite surprised it's quite low for this company, and basically operating margins as well, 12%. Return on equity is 36%, which is really good, which is what you want to see as a basically investor in this company. You want to see if the management is actually doing something good with that money and giving us more returns for our money, right? Total return in the last 10 years, we're looking at about 14%, which is decent for this company. Return on invested capital percentage wise is 24%. Let's call it 25%, which is really good. Revenue grew basically about on average in the last 5 years, so compounded annual growth rate of 7%, which is good. And current ratio, we're looking at about 2.7, which means basically they have enough money to pay off their liabilities in the next 12 months. Okay, this is probably why this is expensive. Okay, so this year they're expecting about 24%. Now with the recession coming up, or maybe it is here right now, I can't see many customers going to basically JDs of the UK, for example, and buying Nike trainers for £200 or £100, whatever these Air Forces are, right? Or any other trainers, right, for £70, £80, whatever. So this is a bit interesting. So if there is a recession in the UK, obviously, if there is in the recession in the US, I don't think this is basically true, because I wouldn't personally, if I'm trying to feed my family, I wouldn't be buying trainers for £200. So that is basically out the window. Okay, but that's what the analysts are saying right now. And again, this is just what they think based on the basically the forecasted earnings. Okay, so in terms of growth estimates for next year, we're looking about 8%. The current ratio basically price is $107. We've already seen. According to Morningstar, they're saying it's actually 21% discounted right now. So $138 per share is where the price should be, and that's really good. If that happens, that's absolutely amazing. And I think at one point in 2021 it was around this price. Okay, in fact, let me see if I can find it. So about a year ago, okay, you can see 138, I think at some point 138. So it almost touched that price basically not long ago. And according to Simply Wall Street, actually, they're saying it's 46% overvalued. So $74 per share is where they think it should be based on their intrinsic value calculations and so on. In terms of tip price, it's actually saying very similar to Morningstar. It's 139, and that's 28 to 29% discounted right now, or upside if you like. Seeking Alpha is more or less the same, again 25%, 26%, let's call it, and it is a buy rating from them. Now, this is interesting because it's very different. Normally these guys are outliers of this, so they're always different too, but these two are almost identical what they come up with, and obviously these two kind of have intrinsic values, whereas these guys are following the analyst and what they're saying. Either way, that's basically what they're saying right now. I'm just giving you that information, so what you do with it is entirely up to you. So I'm not saying go away and buy this stock right now, but I will tell you exactly what I would do if I basically with this company, right? So as you can see here, in terms of Sharia side of things, according to Zoya, is 99.8% business wise. It's absolutely fine. Interest bearing debt really almost non-existent, and interest bearing securities is actually quite low, which is very nice. Now, in terms of shares, they're buying back their own shares. So this company is actually returning a lot of money back to the basically investors, because they're buying back their own shares. They actually giving you some dividend, and they're basically so they're basically that's it. So the two main things: we get dividends, and they're buying back their own shares, which is really good. Now, in terms of looking at their revenue for the next few years, because that's the really important part, okay, right now we're here, $46.7 billion, or basically in May of 2022, so the 16th, okay, 16th of next month, we're expecting the earnings, and that is basically growing from 48 billion to almost basically 50, so it's gonna go up about $4 billion. That's the expectation. And then after that, almost another $4.5 billion the year after, which is really good. And that's really what you want to see, isn't it? So now if we look at the EPS and we take out the estimates, you can see 2020, obviously, because of COVID and what has happened, obviously the earnings declined. All the shops closed who was buying. And then they actually put a lot of money investment into their online business side of things. And that's what's helped the company. Okay, so that's basically why it grew so much. And if you can see here, they actually beat their earnings in the last two. So we will see what happens with this one. Apparently it's not going to be as much as it was last time. So 3.85 it was. Right now they're expecting 3.23, and then after that it's going to come back up again. So it's interesting to see from that side of basically what's going to happen to the business in terms of in the long run. Right, so what would I do with this company? So now you have the full information, okay, and you've got basically the information that you need about basically this kind of gives you an overview. Obviously, you're going to have to look at how much of their revenue comes from the US in comparison to China and all the other places that this company sells their product to. Look at the financials in more detail. Look at the year, and you basically compare this time to last year. Learn about the business. You've done all of that. Then what do we do? So if I was in basically, what will I do in my opinion? Okay, so this is what I would be doing with this company. I like the business model. I like the fact that they have a small dividend and they are growing that dividend. The business is still growing. Okay, the valuation seems a little bit too much in terms of the EPS side of things. Okay, although these companies are saying it's discounted right now, I would actually be interested buying in this stock. Okay, if it goes below 100. So if it goes below 100, I would be interested. So according to Morningstar, it is actually 21% discounted, like I showed you earlier. It's 4 stars right now. So $138 per share is basically what they're saying is their fair value. So what am I going to do? I'm going to add it to my watch list. Okay, you get access to this, by the way, if you join on the Patreon account. So I'm going to leave that. And then I'm going to add here the price, 138, which is basically what Morningstar is saying right now. But guess what? I don't want 5%. I want 20%. Okay. Right now, I want a 20% because if a recession happens, I don't think the company is going to carry on the way it is, the way it's been in the last 5 to 10 years. Okay, it might basically decline in terms of revenue side of things for quite some time. So I'm just going to leave it like that. And right now, it's still a buy. But I'm going to wait until, because I want to give myself a little bit more room just in case. If it goes below $100, then I'm going to look into it. And I'm definitely going to add it to the family portfolios. But I will let you know, inshallah, if I do that and when and if I do, inshallah. Right, like I said earlier, if you're interested in basically joining the Trading 212, please have a look at the link on the description. Put your name in there, and hopefully their waiting list will be over very soon, and you can join it if that's what you were looking for. Anyway, I'm going to stop the video right there. Have a wonderful day. Assalamu Alaikum.